Welcome to Financial Strategies with Andrew and Daniel Adjemi, powered by the Retirement Income Store and brought to you by Adjemi Financial Strategies in Guilford, Connecticut and Denver, Colorado.
The philosopher George Santayana has been credited with the statement that those who don't learn from history are doomed to repeat it. Another way it's been said is those who cannot remember the past are committed to repeating it. Today's show, we want to not only bring up history from 2 decades ago, 1 decade ago, but 2 or 3 weeks ago, so that investors and retirees can learn from other people's mistakes. I'm Daniel Adjemi.
And I'm Andrew Adjemi, and we want to welcome you to this edition of Financial Strategies with Andrew and Daniel Adjemi. Today's topic is lessons learned from GameStop and Reddit. And we're glad to have you back with us today and be back with you. And we're excited about the show. And as we talk about these things that are facing us right now or have just faced us, and in the midst of things and being able to learn from history, so that we don't have to be doomed to repeat history. Daniel, when we're talking about this, and I know before we started the show, you had a lot of different things to talk about in regard to how this episode with GameStop and Reddit is just something that is kind of plaguing people out there today as they invest money. What do you have to say about that?
Well, you and I talked about this a couple of weeks ago when probably it was a more hot topic. And I didn't want to talk about it because I didn't really think it relates to retirees. We're not a stock market show. We want to help retirees protect their money and generate income so that they can sustain their retirement. They can create renewable resources so that they can have a dependable retirement. But then we talked about it a little bit more, and I think this actually does relate to retirees. And because we've gotten so many questions about it, we've gotten so many people that have no business being in gambles like this asking us about it. We decided it was a good topic to bring up on our show and talk about. So maybe we're a little late to all the discussion, but hopefully we can explain it so people understand what happened, why it happened, in language that everyone can understand.
Right. And this is not something that I think we're late on, because the principles apply. If you and our listening audience, the things we're talking about today are primarily principles. I mean, when we attach the names GameStop and Reddit to what we're talking about, that's all in the news recently. But these fundamentals and principles that we're talking about apply no matter what the name. And we chose GameStop and Reddit because that has brought a great amount of pain to people at this point in time. The people that did not get out at the right time and so forth, and it reminds us of what has happened years ago, even as recently as 2008, 2009. When the stock market as a whole dropped, not just a particular stock or whatnot, and then back into 2000 when the market dropped, and back years before that besides. So what we're talking about today has significant, fundamental, and foundational principles to be able to be understood, so for your retirement, because we want to make sure that you and our listening audience are going to be able to retire and stay retired. We want you to be stress-free. We believe that an educated retiree is a stress-free retiree. And we want to educate you and help you understand things that you may not be hearing at other places.
So it starts with the Tina, there's no alternative. It starts with the other saying, the Fed has my back. It starts with the other saying, valuations don't matter anymore, right? We're in a new paradigm. Stocks only go up, and all this set the stage. Okay, there's also some demographic changes. There's also some other things happening with the little guy feeling like he's been left behind, being ripped off. So this is what sets the whole stage for the story.
Right.
And in the middle of 2000, there was this YouTuber whose name was Roaring Kitty. And he started producing content and telling people that there was this company, GameStop, that was undervalued. It had the wrong price tag on it. He said, I don't know that it's that great of a stock, but it definitely has the wrong price tag. And so what he started doing was building awareness for this company. So this wasn't as fast as people thought. This was back in the middle of 2020, okay? And it was trading at $4 a share. So he said, basically, as certain as you can be, this is going up. It doesn't matter if they goof everything up. It doesn't make sense that it's trading at these prices. This was a very intelligent decision. This was a very planned decision. This took tons of research and due diligence, and he put this in, and then started building this following, and people started getting into it. When we look at investor psychology, this is how bull markets start. People are scared of a particular market or stock or things like that, and they start piling into it. And that's a good opportunity. We look for things here at Agimi that have the wrong price tag on them, because that's the most certain way to make money, is if you find something that should be trading higher than what you paid for it. And that's what Roaring Kitty did with GameStop. Now, where we get into history repeating itself and learning from history is the euphoria starts building up. So people start getting excited about it and driving it up to 17. And it's still probably a good deal at $17 a share. There was some short interest, which we're not going to get into how shorting works. And we're not going to get into why there was more short interest than was even stock available. But the point is, it didn't make any sense, and it was a good opportunity to do what's called a short squeeze. And so the Redditors hopped on board, and they started doing this because they said, we bailed out Wall Street in 2009 with our tax money. The banks, the CEOs got rich, and we paid the bill, right? The average person, the middle class, the hardworking American paid the bill for Wall Street and hedge funds' mistakes, for the bank's mistakes. So they started piling in, and then it started becoming a bigger and bigger thing. And it started going up to $50 a share, and then $100 a share, and then $200 a share, and then $300 a share. And it topped out somewhere around $480 a share. Okay. All good, right? Remember the mantras that we were talking about. The Fed has my back. The Fed has a put. Stocks only go up. Valuations don't matter anymore. Okay? This is the mantra. Now, some people knew what they were doing, and some people knew that they were gambling. Some people just wanted to stick it to Wall Street and put these hedge funds out of business that were shorting the stock.
And this happened with both GameStop as well as Reddit. Is that correct, Daniel?
No, Reddit is a group, right? It's a group of people that get together and talk about bets. It's called Wall Street Bets. So it's a group called Wall Street Bets, and they make bets, and they get a bunch of people together, and together, right? These Robinhooders, these Wall Streeters, these YouTubers, together they pool all their money together, and they took down some hedge funds.
Okay. All right. Good. Daniel, this is real interesting. I want to remind you and our listening audience that you're listening to Financial Strategies with Andrew and Daniel Adjemi. Today's topic is lessons we can learn from GameStop and Reddit. And if you have just turned in or been listening, that's a great thing. And we want to offer to you in our listening audience the piece that goes along with today's show, the report that's called Universe of Income Generating Alternatives. Universe of Income Generating Alternatives. Daniel mentioned TINA, which stands for There Is No Alternative, but there are alternatives. And we like to put this report in your hand, Universe of Income Generating Alternatives, and be able to help you with your retirement to understand some things that you may not know. You can get that by calling 800-725 7616. 800-725-7616. You're listening to Financial Strategies. Today's topic is lessons learned from GameStop and Reddit.
Yeah, so the story is the same thing that has happened in multiple bull runs, right? This happened um, in the tech bubble crash. People saw these tech companies, they saw companies like Cisco, like Amazon, like Apple in the early 90s when they were good deals, but the euphoria got too high and it brought these companies up, 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 up to valuations that didn't make any sense. And what was said in markets then was valuations don't matter. We're in a new paradigm shift. These companies are going to change the world. And they do, and they did, but they were too early and the valuations didn't make sense. Um, Cisco, for example, still hasn't reached its highs back in 2000. Okay. So this Reddit story is the same thing, but it happened in fast forward. Instead of taking years to play out, it took, 6 months to play out or 7 months to play out.
Wow.
Um, so why are we bringing this up? Well, we found out that valuations do matter because the stock peaked at somewhere around 483 and then it crashed and it came down to, I think it's trading at like $50 a share today. So for the story goes for Roaring Kitty, he's rich. Okay? He knew what he was doing. He knew the risks. He had it all calculated out. He spent months and months and months doing the research to do this. The people who I feel bad for and who we're trying to help right now with this show are the people who didn't understand what was going on and they got caught up in the euphoria. They purchased it at $75 a share. They purchased it at 100. They purchased it at 200. They purchased it at 300, 400, and some 450. And they didn't just lose all of their money when it dropped down to 50, right? They didn't lose all that by doing these call options. They lost in some cases more than they invested because they used leverage to purchase these shares. So it's not the people who get in at the beginning, it's the people at the end who have the tears and who have to pay the consequences. And this is why we bring up those who don't know history are doomed to repeat it because a lot of people lost everything. Now, some people knew the risk they were taking and they wanted it. They didn't care. They said, I'm going to buy 2 shares because I want to beat up on Wall Street. They robbed from me throughout my whole life. I paid taxes to bail them out. And they knew what they were doing. They knew it was a gamble. And there's some who got out at 500 or 400 or 300 or 200 or 100, and they made a ton of money. But the people who didn't understand what was happening and they didn't realize the risks they were taking, those people are in tears right now. And that's what's happened in the 2000 crash, the 19, the great financial crisis crash. And we see that happening again today in markets, in American stock markets.
Yeah. Yeah. Looks a lot like it did in the late 90s. And it's just crazy, crazy times when they say valuations don't change. There's no alternative. A lot of things going on. Well, if you just turned in, you're listening to Financial Strategies with Andrew and Daniel Adjemi. We're glad to have you on board with us today. And today's topic is lessons learned from GameStop and Reddit. And the thought is, the philosopher says that if you don't know history, you're doomed to repeat it. Well, today we have some books that we want to give you, some things we want to give you. We want to give you a report called Universe of Income Generating Alternatives. You can have that by calling 800-725-7616 because we're here because we want to educate you. We believe that an educated retiree is a happy and stress-free retiree. We want to put some education in your hands and with this show and podcast. And then we also have the book for the next 5 callers at 800-725-7616. The book called The Fourth Turning. This is written by William Strauss and Neil Howe, and explains what's happening in our country right now, written in the mid 90s or so. And so it will give you some insight to what's going on and be able to help you learn those things that you may not know. Again, the book, The Fourth Turning, to the next 5 callers at 800-725-7616. And we will be right back after this.
I'm David Scranton, founder of the Retirement Income Store. If you're in or near retirement, are you certain you have the right retirement plan in place? Do you want to help ensure your nest egg will last you all throughout retirement? Take our retirement review quiz and find out in 5 minutes or less if you're doing everything you can to achieve a more successful retirement.
Visit us online at agemy.com. That's AGEMY.com.